Welcome, everyone. It's great to have you with us for today's session. Just to get us started, a little bit about the UN Global Compact and the UN Global Compact Network UK. We are the world's largest responsible business initiative. Members of the UN Global Compact commit to 10 universal principles derived from UN treaties in the areas of human rights, labor standards, environment, and good governance. You can find out more about what it means to become a member at the links that have been popped into the chat. Our role at the UN Global Compact Network UK is to help participants in the initiative to fulfill the commitments that they've made. And we organize programming like today's webinar to that end. And yes, by all means, please do get in touch with us if you're not already a participant in the Global Compact. We would be delighted to speak with you about that. A big part of our work is to drive progress on the UN Sustainable Development Goals. We believe it is crucially important that all businesses take action in support of this agenda. So we like to just flag the start of our programs, which SDGs are related to the content of the day. And today, goals 8, 16, and 17 are particularly relevant. If you're interested in ways that your business can contribute to achieving the SDGs, we have many resources, tools, and opportunities for engagement on our website, and I encourage you to have a look. Again, links in the chat. Next slide, please. As conflicts in Gaza and many other regions around the world continue to pose threats to human rights, we urge companies to take steps to ensure that they are not complicit in human rights abuses through their direct operations or their supply chains. The Global Compact human rights principles are on your screen, and we encourage you to take them to heart. We also encourage anyone that is able to consider donating to the UN agencies bringing relief to the people that are suffering around the world as a result of conflicts. Links have been shared in the chat. Next slide, please. A little bit about our series and today. As you will all be acutely aware, sustainability reporting is becoming one of the most central aspects of the work of sustainability teams, particularly as jurisdictions across the world are ushering in new reporting standards. I know we're feeling it most acutely in Europe just now, but it's happening everywhere. So we understand that many businesses are currently trying to ensure they have the knowledge and resources they need to produce compliant reporting, and we know that this can require a great deal of effort. So in this session, our objective is to provide practical insights on how organizations can ensure internal readiness for the rapidly evolving reporting landscape. We'll be taking a deep dive into how companies can efficiently prepare the relevant data for new reporting standards and be ready for the audit assurance processes that are linked to CSRD. Let's go to our next slide, please. We have a fantastic group of speakers today. First, we're going to hear from Tim Dee-McCullough and Mark Lumsdon-Taylor from MHA Baker Tilly. They're going to provide us with an assurance perspective on how to produce compliant reporting and what to look for when choosing an assurance partner. Then we have Jennifer Creek, head of ESG at Ricardo, and she'll be sharing best practice and insights from the range of sectors that Ricardo work with on these challenges. And finally, we have Victoria Smith, the external reporting director at Aviva, award-winning Aviva. They've won many awards for their sustainability reporting, including the best alignment with TCFD. So we're really privileged to have what can genuinely be characterized as best practice to share. Just a final word around Q&A. Do please pop your questions into the Q&A box as we go along. Please just keep it for questions to be directed to our panelists. If you have questions for the organizers and the hosts, do pop those into the chat. We'll be monitoring both quite carefully. But if you have a question for the panelists, it must go into the Q&A. and questions for us, please pop them into the chat. Really happy to see so much activity in the chat. Let's keep that going. And lastly, if you see a question that you really like that's been posted in the Q&A box, do give it a thumbs up. We will rely upon your votes and your preferences when we choose which questions we answer when we get to the Q&A. We often find ourselves with more questions than we can get to, so your votes will help to ensure that we're speaking about the issues that are of most interest to you. Okay, without any further ado, let me hand over to Tim and Mark. Thank you very much.
Well, good morning or good afternoon or good evening, depending on which time zone you are in. And thank you very much for UNGC for the opportunity for MHA Baker Tilly International to present to you today. I'm delighted to be here. My name is Mark Lumsdon-Taylor. I am the Head of Sustainability for the UK and a partner at MHA McIntyre Hudson. And my sweet spot, funnily enough, is agriculture, food and farming and aviation, strangely. And I've been a lifer at MHA McIntyre Hudson, Baker Tilly International, and sit on the global responsibility boards for Baker Tilly, as do my colleague, Mr. Tim Dee-McCullough, who we're very lucky to have him within our firm, who is our technical director for environmental social governance with Big Four experience, global experience, and listed entity experience as well. So Tim has pretty much done every major job in the sustainability world. And both of us have been involved in this space long before it suddenly became a major thing. And it's heartening to see such strong people on today's call, including award-winning Aviva, which is as excellency, as well as Ricardo. So what we're going to do is talk briefly about top lines affecting sustainability reporting. We're going to move straight into some double materiality commentary. So if we can just move to the next slide, please. So if you're not aware of this already, you need to be aware of this. So this is the new process within European legislation around corporate sustainability reporting directive and the approach of double materiality. Now, this hasn't been adopted completely across all standards. This is currently applying to European standards. In the UK, it has not been adopted yet with the ISSB, and it's not been adopted in the USA either under the SEC. However, this is a major issue facing European reporting, and a lot of UK businesses fall into scope by default anyway because of their trading. So this is looking at things from a different perspective. It's also now used in sustainability statements. So double materiality, in effect, is impact materiality, how an undertaking impacts sustainability matters. So how does that business impact the environmental social governance world? If it is material, the undertaking is connected to actual or potential significant impact on people or the environment and is related to the sustainability topic over the short, medium, and long term. This includes impact directly caused or indeed contributed by the undertaking and impacts which are otherwise directly linked to the undertaking's upstream and downstream value chain. It is looking at things in a different perspective. Financial materiality, however, is different to your standard materiality assessment when you're looking at your financial statements. So how do sustainability matters affect the undertaking, so the entity or the business, and its performance and positioning? So how does the environment affect the organization? Effectively, the inside-out proposition. It is different, as I've said, from financial reporting materiality because it looks at it from a financial perspective if it triggers financial effects on the undertaking, i.e. generates additional risk or opportunities that influence or are likely to influence future cash flows and therefore the enterprise value of the undertaking in the future. These principles are now mandatory as part of CSRD reporting, and a key part of this is the role of the board and the oversight committees within the organization. Next slide, please. As I just alluded to, the role of the board is absolutely key. And before any double materiality assessment is completed, the board should undertake and evaluate what are material risks and what are not material risks, which then informs the whole process. If the board is not involved at the very beginning, the process will effectively fall down. Equal importance should be given to both sides of impact risk or financial risk, so in terms of the materiality perspectives. Ignoring the second tier or third tiers within the supply chain is a fundamental flaw. You have to look at the entire risk and process right the way down, from not just your single supply chain at tier 1. You need to look at the subsequent impact down to effectively tier 3 or tier 2. Double materiality assessment is something that cannot be completed in a short timescale. It needs time and effort and resources. You can't just knock it out in a matter of weeks. You need a significant number of weeks, and this needs to be project planned with whoever you are working with. We deal with organizations from a global multinational basis to owner-managed SMEs that are in scope of this. Not selecting your assurance provider early will cause you problems further down the line. We have seen a power surge of requirements coming from businesses who are now concerned about how this impacts on their business and what they need to do, because there isn't a general understanding or experience of this at this time. And I think the point that it is never too early to start is important. The climate is changing, the role of business is changing, and the sooner people get onto this, the better it will be in the medium term. You can't just consider a return on investment or value proposition in the first year. You have to look at this as a medium-term project. And on that basis, I will hand it over to Tim, who's going to go into a little bit more detail. Over to you, Tim.
Brilliant, thank you. One point I would pick up on this slide is that I do see a lot of businesses sticking entirely to a desk-based approach with their DMA assessment. Now, surveys do have some value, but they do not replace genuine, tangible, meaningful engagement with your stakeholders. And this is where governance really does come in and actually say, how have you engaged people? If we could move on to the next slide, please. Brilliant, thank you. So in terms of the governance itself, this is increasingly important. It should be important for any major program such as this, but for a number of businesses brought into scope of CSRD, this is probably the biggest transformation type program they've been through in many years. And really, it's important to get the governance right, because you are disclosing this. Anything about how the board or management committees are considering ESG risks, how they're remunerated, and the linkage to ESG performance. We're increasingly seeing that within the FTSE 250. How you do due diligence through your value chain. Now, CS3D, CSDDD, or the Corporate Sustainability Due Diligence Directive, that's a couple of years away, but a lot of the work you do for CSRD will actually prepare the ground for CS3D in a few years' time. Risk management, how are you embedding consideration of ESG risks into your business as usual risk management processes? If you have a risk register, are you already adding climate risks on there, human rights risks, or is it purely operational risks? If you're in the latter camp, I'd suggest that CSRD is the impetus needed to really bring the complete ESG suite into your risk management processes. And then finally, internal controls. The trajectory we're on is that sustainability reporting will be of comparable quality to your financial reporting. And I think it's 2028 where we're moving from limited assurance to reasonable assurance. That's effectively an auditor coming in and saying, this sustainability reporting gives a true and fair view. That's the same as what they do for financial statements. This is the same level of assurance that we'll be moving to from 2028. If we could move on to the next slide, I've got some examples of specific internal controls that any assurance provider would need to see in place. Now, the main challenge with sustainability reporting for a number of years now has been that often the reporting process hasn't been as, I don't like using the term professionalized, but I think that's the appropriate term here, in that often some of the data may be collected, say, by facilities managers or by admin staff who don't really understand the data they're collecting or recording. Now, the journey we're on, bearing in mind that there are over 1,200 data points with CSRD under the 12 ESRAs, there is just too much data for it not to have a robust control environment around that. And many of the controls that we would see in a finance team under financial reporting are directly transferable to sustainability, but there are some key exceptions there, particularly when we're looking at emissions reporting. So really, here are some examples of controls. So spreadsheets, I think around 90% of spreadsheets have some form of error in them. And this is important reporting. If you get this wrong, this could end very badly. I mean, Greenpeace, Just Stop Oil, Extinction Rebellion, other stakeholder interest groups really are paying attention to the quality of your reporting. We've got operational level control, so looking at the data sources, how the calculations are actually compiled, how we get the data from A to B, and what quality review is it been through. But then the importance of robust challenge by the board, by the Audit and Risk Committee, by the Sustainability Committee, that is a critical control that many assurance providers such as MHA will need to rely on to take a controls-based approach to auditing CSRD. You do not want an assurance provider taking a fully substantive approach if you do not have the controls in place, because that is the only real alternative. There is too much data for them to just do traditional ticking and bashing without placing reliance on the controls you have in place. So if we move on to the next slide, please. Brilliant. Talking about assurance, there is a lot of change happening in the landscape right now. Traditionally, sustainability information, when it has been subject to limited or reasonable assurance, there are two standards that have really been applying, the middle two boxes. So ISO 3000, which we tend to use for specific metrics or KPIs, and then for greenhouse gas emissions, ISO 3410. Now, these are standards initiated by the International Auditing and Assurance Standards Board based out of New York. But they've been very isolated instances. Now, with the trajectory with ESG reporting, the IASB has brought out a new standard that is coming out later this year, expected September, October. And this is designed specifically with sustainability assurance in mind. The other standards can be applied to any form of data reasonably anyway. So if we think about this rectangular box as being the complete range of your sustainability disclosures. Now, what we can do is basically say, well, not all of those disclosures necessarily are going to be subject to assurance. So we focus on that big green box. And actually within that, an assurance provider could say, well, actually, no, we're going to designate certain metrics under ISO 3000, but the rest would be, oh, we have lost the slides. The rest will, thank you, but the rest will be subject to ISO 5000, for example. Now, the big issue with CSRD at the moment is that the body of audit regulators across the EU is currently deciding, does it want to adopt ISO 5000 when it comes out? It's a brilliant new standard. There are some fundamental improvements that it will deliver to the assurance market, but they are talking about bringing some carve-outs or adding additional requirements for CSRD, which is causing all the audit firms and networks a fair amount of consternation, not to mention because certain member state regulators such as IASA in Ireland, the Irish audit regulator, are already consulting on whether to use different standards as well. So what I'm trying to say here is that this is an evolving market, an evolving situation, and the audit committees really need to be engaged as part of this process. So if we go into the next slide, please. Brilliant. So it's really important the audit committee is involved from the outset in terms of appointing that assurance provider. Now, the largest businesses will no doubt have appointed their provider a year, 18 months ago. But there is a process in terms of the way the member states are implementing the legislation. And so they've got only a couple of weeks left to actually get the legislation through their national parliaments. But here are some questions that you, if you're an audit committee chair or an ESG committee chair, you should really be asking prospective providers. And the most important element for this really is, how are you going to create value through the engagement? CSRD is an evolving process. It's an iterative process. It's dynamic. It's definitely not linear. There's an amount of going forwards, going backwards. Your assurance provider should be there to actually be that independent, that robust sounding board that you can bring their questions to them and they can express their concerns, suggest enhancements through that process. And I'll hand back to Mark now, if I may.
Thank you, Tim. Just having next slide, please. Just picking up on one comment that we've just made, is that the role of the board and governance in this entire process is pivotal. If you don't have the full engagement of the board in terms of evaluating corporate sustainability reporting directive or any other directive that involves double materiality, the process will fail. And then ultimately, as Tim mentioned, limited and then reasonable assurance, your auditors, external auditors, will be taking a view on this as well. And if they're not satisfied, this also may ultimately result in qualification or certainly qualified by matter within the financial statements. So this is quite important stuff. I'd just like to touch on a point in the chat, in the Q&A. Somebody raised the question of what is the difference between sustainability and ESG. Sustainability is the overarching term, and I'll quote what I always quote, which was the Brundtland Commission's definition, which is meeting the needs of the present without compromising the ability of future generations to meet their own needs. That is the 87 definition that I always quote to our clients and also internally. The role of sustainability in the role of ESG, it is a reporting framework that absolutely superseded what was corporate social responsibility, Andrew Carnegie, which was the principle around doing well and then doing good. ESG is the embodiment of doing well in the right reasons, at the right time, in the right way, without compromising the business's impact on the environment. And it's not just about the environmental impact, it's a societal impact and also the role of governance. So just very briefly, as a firm, we see that corporate sustainability shouldn't come at the cost of corporate profitability. You have to look at this from a value perspective. There is and I will use the word tsunami of people out there now offering services and advice. Our view is speak to specialists who know their stuff and speak to qualified people, because if you're using the wrong people, and I think the CSRD regulations state that you must be qualified under ISQM regulations to make sure that this is actually done, please do make sure you talk to the right people. In addition, I think considering the way in which you manage and report on your greenhouse gases, and the way in which that is regulated, again, is some of the services that not just us, but other firms and organizations offer. And I think the final thing I would say is that with businesses, whatever scale and size, the thresholds at the minute are substantial. Another question in the chat. UK, it's over 500 million, 500 staff for climate financial disclosures. The EU are looking at £40 million euro thresholds by 26. This is coming down the chain and businesses are going to need to respond to this. And irrespective of where you are, you might not fall into compliance, but you may supply somebody that does, which means they fall into compliance, which means you will need to do some form of reporting and disclosures. So please don't think it just doesn't apply to you because you don't meet the thresholds. And on that note, next slide, please. I think we are going to wrap on our time and hand over to the next speaker. Thank you very much for your attention.
Coming back to me before we go on to Jennifer. Thanks very much, Tim and Mark. I think for many in our audience, their blood may be running just a little bit colder now. Those assurance requirements do seem rather daunting, and especially for smaller companies. So I think that's stuff that we'll explore further when we get to the Q&A. And I just want to maybe just touch on a couple of your final points, Mark. Couldn't agree more as to the relevance for companies of all sizes. I think that's a really key driver that everybody needs to bear in mind, that just because you're not in scope of these regulations officially. In practice, everybody more and more is. And finally, not only do we think sustainability needn't come at the cost of, at the expense of profitability. In fact, we certainly would take a view that for many companies and in the future, we think that sustainability will be a key driver of
Highly agree.
profitability. We certainly, that's the world we want to live in anyways. Okay. Thank you very, very much for that. Do please keep the questions coming in, everyone. Thank you. And do keep on voting for your favorites. And now let's go on to Jennifer's presentation.
Thank you very much, Steve. And again, very delighted to be here and with the speakers today as well. So excited to take questions a little bit later. So my name's Jennifer Creek. I'm the head of ESG and I'm representing Ricardo PLC today. So we're probably going to switch gears a little bit to give you a bit more practical insights into how we're working with clients to really navigate this, not only from strategy, but actually implementation. So at Ricardo, we're a global engineering and environmental consultancy, and we work across many different heavy industries. So if you go to the next slide, this will share with you just the range of industries that we work with. But we work with really those heavy industries that have very complex sectors that they enable or are themselves. So from chemicals to mining to airports and very large engineering firms. So when a lot of the headwind of ESG regulations falls, it can be quite a complex scale to bring in-house really and operate from a governance level. There's also a lot of decentralization in many of the companies we work with, which are very business-led rather than the group level. So a lot of decisions on how you fall in scope and where that's placed from a financial accounting perspective can open up many different discussions as well internally. So in addition to the range of sectors that we work with, we do also work with privately owned, publicly owned, large, medium and SME based companies. And all of them come with their own unique story on how they're managing sustainability internally and also their approach to governance. But there are some common themes that do come up regularly, whether they're small companies or large companies, which we'll touch on as I go through some of the slides. One thing I did want to share, though, across the board is how important culture plays an important role within the company and how they respond to the ESG reporting requirements and regulations. We're seeing, particularly for non-EU parent companies that are exposed to the CSRD in the US, for example, that a very compliance focus is taken, and no doubt a compliance focus should be taken. But we do, we do also try to recommend that you do go in not just thinking of compliance, because that also can blinker you on the benefits of the opportunities of actually engaging really early on in the processes of regulatory compliance. One of those is a double materiality assessment and starting that journey early, and also the assurance process as well, to understand actually what you're going to be assuring against, and also the level of data and the quality of data you need. Doing a double materiality assessment, we've found as well with clients, also really helps them actually bring the right parties together to have the discussion, and that in itself is very much a learning as well. So if you go to the next slide, I just touch on some. So within Ricardo, we have quite a breadth of services, but within our sustainability group, we cover a number of sort of topical areas here, and many of these lend themselves to the standards and the focus that a lot of our clients are working on with regard to material issues that they have today. We benefit actually through our advisory on helping clients not only with the strategy around sustainability, but actually how do you take them through that full journey to implementation. We work with public sector government as well, so have that deeper insight into translating what can be quite complex legal texts into actually practical hands-on approaches to actually implement that locally as well. So when a lot of our clients particularly struggle with lots of data, and there's lots of misinformation out there as well on how you comply. So often we'll get clients, you know, saying, is this the right information? Is this not? Always go back to the legal text, but often the legal text, unless you're a lawyer or trained in it, is very difficult to navigate in itself. And examples being the Corporate Sustainability Reporting Directive, a set of standards, a link to that, which the European Financial Reporting Advisory Group, EFRAG, designed to support the European Commission. So there are a number of implementation guidance now coming out, and they were finalised very recently on how to actually do the materiality assessment, how to assess your value chain, and then also the data points that are attached to the legal compliance under the CSRD and the European standards. So there is, the good thing is there is implementation guidance coming out, but you still need to navigate that. And so often we're now being brought in to help, just to be a partner, to advise. So we very much support clients, as many other third parties do, in supporting clients along this journey. So if you go to the next slide, please. So I thought it'd be helpful to just pull out a few of the key areas that we you know, come up quite often with clients, and what we're also noticing develop organically with clients. So governance is really defined as that process of making and enforcing decisions within a company, and it really is essential in CSRD because it directs the company to integrate sustainability considerations. So some of the areas that we've found companies who are very successful is when they appoint an executive sponsor or champion. So depending on who really leads sustainability in the company, whether it's your chief financial officer, or you do already have a chief sustainability officer, having that sponsor is critical to ensure that you've got that top-down support throughout. And you know, the Corporate Sustainability Reporting Directive has no doubt touched upon many boards' conversations over the recent last 6 months to 12 months, no doubt. So if you are a sustainability professional on the call, this is really, you know, a platform for you to really start to build that governance structure internally and those robust systems and controls that you need. This is also an opportunity to upskill your functional and business leads. We're finding that across businesses that we work with, there's often pockets of knowledge and understanding, but not often sort of the detailed understanding of the risks, impacts and opportunities. And bringing those business leads and functional leads into your early double materiality assessments can really help you actually get their buy-in at an early stage to help with the later implementation as well. Many of our companies are very nervous about the standards in themselves and the amount of data attached to that. And in a moment, we'll draw on that and have a look about what data points and how many there actually are. But often we also advise to not necessarily start with new processes, but actually collect together what you already have and start to adapt those strategies as you go along. This doesn't have to start at ground zero. Many companies, and particularly UK PLCs, you have already started to structure, particularly on the climate reporting agenda, a lot of good information. So it's really about piecing the story together and identifying those gaps. So by doing an early diagnostic or a kind of business readiness check, you can already do those hotspots analysis to really understand what are the key gaps we have and what investments do we need to make in this year to set, you know, to set the right direction for the company. Because it's appreciated that budget constraints are tough. So ensuring that you know, that you have a plan over a period of time when you're going to make those investments, so is really important. Building a dashboard as well. We have many clients who are starting to use different software packages, but also just using Excel. The power of Excel is still very much proudly used by many of the clients that we use, enhancing that with Power BI and building on that, particularly in these early years as we see software really develop and come into its own as well. The other key part that we see and we try to advocate as well is bringing in subject matter experts. Now, they don't necessarily have to be consultants. They could actually be subject matter experts in your value chain. So, you know, reach out to your suppliers, reach out to your customers and engage with those peers across your value chain, as well as your direct industry peers. Those can also draw on very new insights that you weren't even aware that you had before. So it is part of a collaboration, a journey, and don't feel alone in this as well. So if you can go to the next slide, please. So often we're asked by clients around the double materiality assessment, but very much now we're asked, you know, what are the next steps after that? You know, what does an implementation plan look like? So this is a very high level CSRD roadmap and some of the key steps that you might take along that journey. So once you've done a double materiality assessment, this is a really key piece to really get everyone on the same page and really to develop what is financially material that we need to report out on around impacts, risks and opportunities. Well, once you've done that part, many companies are on a cliffhanger. They don't really know what to do then on. So once you've done that materiality, it's really then to translate that to the standards, which are the European Sustainability Reporting Standards, the ESRS, and to do a gap assessment against that. Once you've done that gap assessment, it's a really good time to then look at your strategy, how your strategy is today, and then sort of look at ways in which you might need to improve on that or adapt that slightly. I think for most clients that we work with, the core elements of their strategy are there. So it's really around building a little bit more robustness on some of the data and the KPIs and how they build that out. And then the journey continues, but very much through developing a really strong implementation plan. And this is where using a third party can sometimes help structure that so that you can really start to then embed that internally. And we work very much hand in hand with our clients, you know, as that extended team member to support them on that journey. And I think, you know, more and more companies are seeing the value of that. So they internalize the process, but use an external partner to support them. And again, that's interpreting text, legislation, and also giving best practice of what others are doing as well. Particularly if you're in an industry that's not well represented, that you don't have peers and trade groups you can discuss these with. It can be a very lonely process. So ensuring that you are engaging with the right people is incredibly important as well. So I'm going to move on to the next slide, if that's okay. So this, for those of you who like a bit of data, these two slides illustrate the breakdown of the data points in the new European Sustainability Reporting Standards. So the EFRAG, the European Financial Reporting Authority Group, released the final implementation guidance, and part of that was actually a download of the data points that fall under the different standards. Now, there are 12 standards in total, 10 of those are topical standards, and following the double materiality, you would determine which of these standards you'll need to report out on. Now, not all of these are you'll have to report out on, but if, for example, you did have to report out on all of these, the mandatory data points would be 783, which extremely overwhelming to think about that. 21% of those data points are irrespective of the materiality assessment, and 79% are subject to the materiality. So it could be that you only actually report out on, say, 5 or 4 of these topics. But I did want to draw your eye to, when we talk about data points, what we're actually talking about here, and actually the numerical data points that are attached to the standards are actually quite low in some of the standards. So several of the social standards don't actually have numerical data attached. It's all narrative or semi-narrative. And the key standards that have the data attached, and this is important when you're thinking about investing in software systems, etc., is the climate change, the resource use and circular economy, some on workforce, and then on pollution as well. So if you look at climate change, that grey bar there, more than half is numerical. So I guess as a kind of no regrets option, most companies will fall under the climate change standard. So getting already ahead of that and making sure that you can comply with that standard, even before you do a double materiality, you know, that's really going to be a no regrets option for you. So if you go to the next slide, and this is just my final one, I just thought I'd share a few kind of key thoughts and considerations about when you're buying ESG software. You may decide Excel's are the way forward, that's the way you want to work, particularly in these early years where we're seeing systems and processes very much develop in the marketplace. But a few kind of key thoughts about, critical aspects really to think about when you're looking at systems. So regulatory and compliance updates really ensure that the software is designed to meet the specific requirements of your regulation that you're responding to. So if that's the Corporate Sustainability Reporting Directive, the software should automatically update to reflect any of the changes or updates over time. So it's worth making sure that those are regular updates and that they're capturing that. Data integration and capabilities. The software also should be able to integrate with existing systems. So many of your companies probably already have a lot of other software systems. So having the ability for those to talk to one another is also something to investigate, or at least understand how those developments are evolving with that solution. User friendliness and accessibility. There are so many systems out there that are overly complicated. And if you're going to use a software system, it's going to have to be used by multiple parties within your organization. So it should really have an intuitive interface, and it should be really easy for users to use and navigate. And also make sure that any provider does provide you that training package as part of that, and ongoing customer support as well. The ability also to create customized reports is really important, particularly for those jurisdictions that you might be operating in, or as a non-EU parent in the EU, reporting against the CSRD, the GRI, which is still voluntary, the ISSB standards, or the IFRS S1 and S2, making sure that you're able to have those multiple frameworks and report out once for many of those is also very important. And then other areas around data privacy, security, scalability and flexibility, and then also the reputation of the supplier as well. As I mentioned before, engage with your peers upstream, downstream, your suppliers and your customers. So not just your direct peers in your industry. Understand what systems they're using, because that can also be very important for you moving forward. Because part of the approach of the Corporate Sustainability Reporting Directive is you take that full value chain approach with your issues, risks and opportunities. So over time, as data gets more available, understanding what your suppliers and downstream gathering that data is going to be really important. So understanding their systems as well could be quite an advantage for you in the future. So I'm going to pause there just with a view on time, but thank you all for listening, and I'm happy to take questions as well. Thank you.
Thank you, Jennifer. That was fantastic. Really concrete, practical guidance there that I'm sure everyone really appreciates. I was particularly taken with your point just around the opportunity that CSRD presents for sustainability professionals. We all know that nothing focuses the attention of leadership more than compliance. And when it's such a big compliance issue here, there's a great opportunity, as you noted, to get governance in place and to get sustainability positioned within the company in ways that might not have been so easy without that compliance driver. So really interesting stuff there. And again, lots more to unpack when we get to the Q&A. So thank you very much. Do all please keep the questions coming. Thank you. And even more importantly, because we have already got so many, do have a look and give a thumbs up to the ones you'd like us to focus our attention on. And now let's move on to Victoria.
Hello, everyone. Great to be here with you this morning. I'm Victoria Smith, Group External Reporting Director at Aviva. I'm responsible for external reporting of Aviva PLC's financial and non-financial reporting. And I'm going to share some of the experiences that I've had setting up climate and non-financial reporting capabilities within finance. Just to share a little bit about Aviva for those that are not so familiar with us. Aviva is one of the UK's leading insurance, wealth and retirement businesses with over 19 million customers in the UK, Ireland and Canada. So Aviva has been reporting on climate and sustainability for several years now, and we've been reporting in accordance with Task Force for Climate Financial Disclosures, or TCFD, since 2016. And sustainability is also one of 4 strategic pillars that Aviva has. And in 2021, Aviva announced ambition to be net zero by 2040. Our 2023 external reporting suite that you see here on the screen brought together our financial and sustainability reporting. So we issued an annual report and accounts, which integrated sustainability reporting from a strategic perspective, including the progress we've made during the period. And the report had a few sustainability metrics that we focused on in that document to explain our progress and to provide our messaging. We also published a climate-related financial disclosure report. That was a compliance report with the mandatory requirements in the UK on climate. Aviva has to comply with TCFD through the listing rules, and it brought together a more broader suite of climate metrics in this document. In addition, in the UK, there is legislation from the Financial Conduct Authority, which requires climate or TCFD reports for certain asset owner or asset manager legal entities. And Aviva has 5 such entities in scope, and the TCFDs for those legal entities are produced as an appendix to this group report and issued with the group report. We also have a reporting criteria document that's published, and that provides our definitions of the metrics we use. And the final part of the reporting suite is our Excel data sheet of metrics. And that is enables data to be easily accessed by rating agencies, and it has all the metrics in one place in that document. On 2023 metrics, we did obtain some assurance on certain of the metrics that were reported. And all of this reporting suite we publish alongside our financial results, and it all went out in early March 2024. If we move on to the next slide, please. I'll share a bit more on the journey that we've been over in the last few years to enhance our sustainability reporting. So we've taken an approach to apply financial reporting to sustainability reporting and set up capability within finance to do that reporting. The group report, the reports that you just saw in that reporting suite are all produced by the same team that produces the financial reporting. We have the same key controls over that report production, whether it's sustainability reporting or financial. We've also put in place a control framework similar to our financial reporting control framework, and we've developed and continue to develop internal reporting to monitor our progress and to help ensure readiness for external reporting. We've set up defined accountability and governance pathways through the group board committees. In addition, the same legislation I referred to just now in the UK from the FCA also requires Aviva to publish TCFD or climate reports for any in-scope asset, in-scope products or funds as an asset owner or asset manager. And there's several hundred of those that are in scope of the requirements. Aviva was required to do first reporting for full year 22 to publish by the end of June 23. So we're now into our second year of reporting, but that meant that we needed to set up capability to produce climate metrics at a large scale. If we move on to the next slide, I'll share a little bit more about the structure we've set up within finance. So we've put in place a centre of excellence within the finance, a dedicated team. It's a shared service model to serve the needs of group entity, product and fund reporting. The Centre of Excellence produces the climate metrics and also has a role reviewing and challenging the broader suite of metrics that support our sustainability reporting. And the intention with setting this up was to bring the reporting on par with our financial reporting. We have group leads, which we've identified that are responsible for different areas of our metrics, and they provide the inputs to the Centre of Excellence, who then report the metrics internally and externally. Within each of our pillars there. There's a market lead that collects the relevant metrics to feed through to the group leads as necessary. If we move on to the next slide, I'll talk a little bit more about this capability. So in terms of our approach, we have put in place documented definitions and methodology. So that's for an internal reporting manual, similar to our accounting reporting manual. And then we have a summarized version of that that forms our reporting criteria external document. We have governance over the changes to that methodology and definitions, and we ensure that those methodology and definitions are consistently applied when preparing the metrics. We have a regular cadence of internal reporting for metrics, and we've taken an approach of determining which the frequency for particular metrics depending on their importance or significance to report internally. In terms of processes and controls, we really look to our financial reporting approach. So we developed the control framework equivalent to financial reporting. We've documented what the key controls are, and also we test those and do walkthroughs of those. When we really think about controls in two buckets in this area, there's a bucket around producing the reports, and there's a bucket of controls around producing the metrics themselves. And that's the approach that we've taken. And where possible, we've aligned and picked up controls that we have in financial reporting and applied them to sustainability reporting. And then where there's gaps, then we've identified a new control as relevant. We have standardized processes, so we do things like on financial reporting. We have instructions for our business units and for our leads on what's required. We have put in place processes that are consistent whether we're reporting for the group or an entity client report or at the product level. And we look to follow the same report production controls. By doing this and looking to financial reporting as a first step, we've minimized the number of additional new processes or new controls that have been introduced for this area. People were a critical part of the capability we've set up, and we established a dedicated team. The team was all internal hires and all predominantly from the finance function. Training was important for the finance team to expand their knowledge on sustainability and the metrics. And we also made sure that we trained our sustainability stakeholders in the business on reporting and controls. In terms of data and technology, again, we looked in the first instance as to what systems we have internally available, and we use the same reporting system for sustainability reporting as we do for financial reporting. We looked at defining the data models and all the data points required and definitions of those data points. And we had to do that on a large scale given the volume. Where possible, we've introduced self-service access, for example, for analysis of climate metrics. If we move on to the last slide, I'll talk briefly around the governance that we've set up with our group board committees. So in 2022, Aviva set up a specific customer and sustainability committee as a board subcommittee responsible for providing oversight of the sustainability ambitions. There's accountability has been set up between that committee, the group audit committee, and the board risk committee. The group audit committee reviews the climate and non-financial reporting disclosures and monitors the effectiveness of controls over that reporting. And we keep our audit committee informed on the regulatory changes that are coming. In addition, we also have an external judgment panel which supports the development of our climate methodologies and helps support this structure. That's comprised of certain external experts who provide independent viewpoint and challenge on our methodology, specifically around climate and scenario analysis. In addition, as I mentioned previously, we have attained some independent assurance over our metrics. So in summary, these steps have helped provide the building blocks upon which we have reported in the recent years to date, and we look to use these building blocks as we put in place and develop our processes and go on this journey further for the increasing mandatory reporting requirements that are coming over the next few years. Thank you, Steve.
Thank you, Victoria. Again, really appreciate really from all of the presentations just how practical you've been, and it's really great to see what I think for most companies is going to be an aspirational setup in how you're dealing with your data collection and reporting. And I think that's having that example is tremendously valuable for everyone. Okay, well let's take down the slides and let's get us all on screen. Let me just remind everyone in the audience again. Questions for our panelists, please put them into the Q&A box so that your fellow audience members can give them a thumbs up and vote them up. We're not just being lazy, we do it ourselves, but we as panelists are not, Zoom doesn't let us post into the Q&A box. So we need you to do that yourself. So please keep the questions for the panelists coming into the Q&A box. Please do help me out by giving a thumbs up to the questions you'd like us to focus on. And lastly, we had planned on wrapping up at 11:45. If anybody's able to stick around a little bit longer, I am, and I'd be keen to carry on and see if we can get through a few more questions. But let's see where we're at when we get to 11:45. Okay, the question that has attracted the most votes so far, and again, keeping things practical, is from Don Jayasingh, and he's asking, are there good templates we can use to carry out the double materiality assessments, including sustainability, ESG topics, subtopics, etc., and the metrics to be assessed for relevant topics? Now, Tim, you've popped a written answer in there. Could we start with you, maybe just for you to elaborate that? Because when we get to, for the folks that are watching the recording, they're not going to be able to see the written answers. And given the level of interest in this question, I think we should all weigh in on it. So yeah, Tim, please get us started.
Of course. I think that the point I would make, speaking as an assurance provider, is that the templates that there are a number of tools out there, from tiny little simple tools to very big complex tools, spreadsheets to online and so on. The key point isn't the tool you use. The key point is the process you go through in terms of meaningfully engaging with your stakeholders. How are you mapping your business processes? How far up the value chain are you going? How far down the value chain are you going? Really, it's the evidence you collect from that and the validation of the double materiality assessment you do that will drive everything else. So if you invest, typically I say to people, invest 40% of your time of the overall program in that double materiality assessment, because you have to get the process right. I don't care how you document it as an assurance provider. I'd suggest you bring me along to some of those workshops, but really it's the thought process you go through that's more important than the actual tool you use.
Thanks, Tim. Jennifer, could I come to you now? Just how does that align with the advice that you're giving your clients?
I think I tend to agree. It is the process, and I don't think there are some clear steps that you take along your journey, but there is flexibility, and we build that in quite a bit with our clients now, depending on the maturity of the internal environment, but also the external. So unfortunately, there aren't many off-the-shelf products today, and if there are, then they often need still that human intervention as well. So kind of the key steps are sort of identifying your topics. It's then looking at the understanding your stakeholders, because you've got to engage with your stakeholders externally and internally. Then it's looking at really mapping your value chain, which often people forget about this as well. But as part of your review of your issues, risks and opportunities, you need to be looking upstream and downstream. And, some clients that we have are very confident they know all the insights already about their suppliers and customers. But I think, through this process, they very quickly find out that actually there is a lot that they don't know. So again, that kind of mapping and that actual just getting everyone together actually is normally a bit of a aha moment going through the process. Once you've done that, it's really then to take the outputs of those stakeholders' engagement, and you can use surveys, you can use, you know, for quick, massive amounts of targeted information from different groups and your stakeholders, you can use surveys, but often now we're doing a lot of focus groups as well, so it allows you to have that dialogue. And then once you've gone through the identifying the topics, the stakeholder, the mapping, and the value chain review, you then can move on to doing the actual analysis. And the analysis for impact and financial is quite prescriptive, actually, in the implementation guidance. But, you know, for the first year, you know, it is always recommended that you have someone, a partner, whether that's that you can work with, to just go through that process with a view to internalising it for future years as well. Because then they can help you set up the process, set up the documentation that can then go through the auditing as well. But as Tim said, and I've heard from many other, you know, assurers that I've worked with as well, sometimes it is more about the process and the output in these early stages of making sure that you've credibly gone through all the right checks throughout the process as well. And I would just reinforce to just start the journey, even if it's on paper and it's just you're going through it without a tool, so to speak. You can build the tools as you go. But yeah, as I say, often it's helpful to have a third party, but we're seeing more and more clients do it internally, but reach out to us to just be advisory checks. So it's kind of a pre-check before they go to an audit, so that they can say, look, we've done this internally. Does this seem right? Have we interpreted this right? So, you know, you don't have to have someone that's going to do the whole package for you. You can have those options as well. And that makes it much more cost effective for you. And then you also enhance that education and training internally by investing that early on. So, yeah, so I'm sure there will be more and more tools that will develop, but where we're seeing is very customized tools, because every business is very different in the activities, but the steps you go through are the same. So yeah, hopefully that helps.
Thanks, Jennifer. Mark has messaged me that he has to leave us. So before you go, Mark, do you have to leave now, or do you have to leave?
I can say for a few moments, yes. As ever, pulled in many different directions, but I would just echo what Jennifer just said. Right now, everybody's evolving. It's like climate financial disclosures in the UK, which have been enacted in the Companies Act. There's no historic comparatives to work with. It's like when TCFD got first implemented, it took 2 years to settle that down. And then people started to look at comparatives, and we still don't get that right in terms of analysis and metrics. It's one of the biggest challenges. I think with CSRD, because of the scale of data points, which has been so well illustrated today, you have to work on bespoke, and trying to put technology and software packages into it at the minute, I think, is too early. What we're finding is we're doing this almost, if you like, case by case, depending on the scale of the entity. I think the point about pre-audit compliance is a really important one. Doing your pre-checks, whether you get additional assurance through whatever standards, ISO 3000, ISSA 5000, as it moves into force, I think is really relevant. So yeah, apologies, I do. Tim is going to stay on, but I need to drop off. And I just say it's been a pleasure to meet such competent and knowledgeable panelists, and hopefully this has provided value to the people on this call, and we look forward to working with the UNGC further.
Thanks very much for your contributions today, Mark. We really appreciate it, and have a good rest of the day.
You're most welcome.
I was struck by something in Jennifer's presentation, just that chart showing how the materiality assessment really is so critical in establishing which data points you're going to have to report on. So I think that all of that point about getting it done right up front is so critical. So yeah, I really appreciate that point being made clearly. Victoria, did you want to come in on this? You guys have kind of developed your own path forward by the looks of it. Do you feel that was the only way for you?
I don't think it's too early to start thinking about materiality, and I think there's reference that the ISSB standards are still evolving. The ISSB first 2 standards have been issued. We're waiting for endorsement in the UK, but the standards are there. And I think applying a materiality lens is really important to start getting on with the work and thinking about the practical implications. And I think that what we found is there's different ways to look at this. There's some items, some metrics which are really material strategically to track progress. There are some metrics that would be material and captured by the mandatory requirements, but are perhaps more data points in nature. So I think it can also be helpful when you're going through this exercise to think about the metrics that are being captured and putting them into those kind of buckets to help think about your approach to collect them and to report them.
Thank you. We have a question that's come in from Astrid asking about the UK situation. And I think another interesting question from Dawn that's kind of related. I'm going to just read out the question from Dawn. And Jennifer, you did indicate you'd like to answer this one, so I'm going to come to you first. Dawn writes, as the ISSB standards and the UK specific sustainability standards are still evolving, can we use the CSRD sustainability topics and subtopics for the double materiality assessment process in the interim? And just to remind you of Astrid's question, there's a lot of references to CSRD for companies that are in the UK that only operate in the UK. Is that still a useful guidance, or is there another regulatory framework that they might look to for guidance while we wait for the UK to produce its own? Jennifer.
I think it's a really good question, and just on reflection, I mean, we obviously review all the standards, and there is a lot of interpretability going on at the moment as well. So ISSB also released a mapping document against the ESRS, which is the European standard. So there's a lot of these mapping documents that are also coming public now as well. But I guess the sort of short answer to that is yes. The one thing that the CSRD does do, and the FREG standards that are now legally binding as part of that legal text, is that they do nicely list out in one of the annexes all those topics. So, you know, that's a really good starting point to take those topics, then layer in and look at your own topics as well, because bearing in mind there may be additional risk opportunities and key topics that are actually more sector specific. So today all the standards are very sector agnostic. In the next 2 years, there'll be sector-specific standards coming out as well, and those have been delayed to June 2026 now. But so it's a good grounding point to start there, and then just build on. But the building on, you can look at your own risks and opportunities and topics that you've had. Are there any that go outside of that? And then look at, you know, the GRI, the Global Reporting Index. That's still a very foundational base to think about the impact topics that you should be thinking as an organisation. And then the ISSB as well, and also TCFD. So if you're a UK PLC, you're already been integrating your risks and opportunities from your climate registers as well into that as well. So yeah, it's a build up, and we just use that as a way to just not exclusively use the CSRD topics, but actually to build on and layer that on. Because otherwise, I think everyone will have the same set of topics, but you really need to make sure that you're just making sure it's unique to your business as well. And I think in the early stages, there'll be a lot of materialities that look very similar, actually. But as with all of these things, they become less boilerplate and more specific to the business as the business really grows and enhances and builds that into their understanding and knowledge of how they can actually use this to their advantage. And I do believe that it can be a competitive advantage, although it seems very daunting at the moment, in how you actually use a materiality assessment to drive those insights on your stakeholders and their perspectives as well. So I think we get too focused on the compliance piece, but really we need to extrapolate out what the key insights are and use that process. If you're going to invest the money, use it to the benefit that you can in every sense. So yeah, 100% use those topics as a baseline, but then build on those with other topical areas to make sure it's true to your business.
Thanks, Jennifer. Could I come back to the UK question? And Victoria or Tim, do you have a crystal ball or any insider information that could just give us a sense of when we might expect to see UK regulations and any thoughts on what might be coming? Tim, you're nodding.
About 2 or 3 weeks ago, UK government came out with an update on the UK sustainability disclosure standards. They've now said they're targeting Q1 2025. I suspect post 4th of July, that timetable might be accelerated. The main issue here is that we've got 3 or 4 different government / quasi-government bodies involved with this. There's the UK Endorsement Board, Financial Reporting Council, Department for Business and Trade, Department for Energy Security and Net Zero. So that there's a lot of moving parts here. And behind the scenes, my conversations with the civil service is that, well, this is now parked. Let's see what happens after the election.
If I may, Steve, I was just going to add to that. We're also advising with those timescales that clients, particularly UK PLCs, just go forward with the IFRS S2 climate standard, because many companies are already reporting TCFD as part of their climate financial disclosures anyway. So it's a natural step to just move into that direction. Also, companies are reporting against the CDP. CDP this year has also integrated the ISSB standards and several other frameworks and standards, and also aligning with the EFRAG. So if you're using that as a voluntary platform, also remember that in itself is a gap assessment this year that you'll be doing, and can line up, you know, some of those gaps that you might foresee as well for your annual reporting. So there's many, as I said, different interpretability sort of, I guess the external world is trying to help companies by supporting the interpretability of these, but it still can be quite a maze to navigate as well. But I agree with Tim, there could be some acceleration, but so starting with that climate standard definitely is something, is I think a no regrets option to start already doing that. And then the broader general sustainability standard for IFRS S1, it would be a next evolution for perhaps next year. But again, if companies are already reporting against the Sustainability Accounting Standards Board, SASB, which has been about for some time and now integrated into IFRS, again, you've got a good foundation to build off. So, yeah, so.
Sorry, Victoria, could I just ask you about, again, have you got a UK standard coming in? Is that something you perceive as a material risk, that it's going to be significantly different from what you're already doing around the other standards? Or is this something, I can see that people who are out of scope of some of the European legislation and it's something new to them, but for those that are already in scope?
I think that the ISSB standards definitely worth working through those, as Jennifer said, you know, particularly the S2 align on the climate side. I think that we expect more regulation in this coming. So I think in terms of readiness, I would look at and we're looking at the ISSB standards and getting ready for compliance with those in particular.
Thank you. Now, I'd rather taken a liberty to say that we would run a little bit long. Is that okay if we went for another 5 minutes? Are you guys okay with that? That just
my apologies, Steve. I'm going to have to drop off at this point for a client call, but more than happy to connect with people via LinkedIn. If people want to email me, please do so.
Thank you very much, Tim. It's most appreciated. We really appreciate you staying this long and for all of your contributions. Thank you very, very much.
Cheers.
So I acknowledge it's a bit unprofessional of us to run a little bit long, but with so many questions still hanging, I'm keen if we could knock off just a couple more before we get going. if I may, I'd like to just return to the question, well, not even the question, but the point that Mark raised at the end of his presentation about smaller companies, because really everything we've been pretty focused on larger companies today. But to Mark's point, if we're projecting down through the supply chains, we're making impositions on smaller companies. And I'd be interested to hear, Victoria, you have obviously many smaller companies in the Aviva value chain, and Jennifer, I'm sure your clients do as well. Just how are you engaging with smaller companies, or have you got any insights into how they are dealing with these questions? Jennifer, would you start? Is that?
Yeah, happy to. So there has actually been some voluntary guidance for companies for the Corporate Sustainability Reporting Directive. There has been some voluntary for listed and non-listed SMEs guidance that's been launched. It's only voluntary at this stage, and a pared down version of what larger companies are having to report against the European Sustainability Reporting Standards. But we've been queried already by several small companies who want to just do some gap assessment against the SME standards. And some of those are just UK PLC, sort of UK-based companies that don't actually have a foothold, but have some customer base outside of the UK. And they feel that by getting ahead and just making sure that they're aligning with this double materiality approach, they'll be in a better position competitively as well. And it's expectation as well from some of their larger companies that they're going to have to do that. So, but the challenge for SMEs is the resource internally to do that, and also the cost to do that. But these standards that were launched, earlier this year, and there's one specifically for listed and one for non-listed, and we can share the link perhaps later as well. They're still under consultation, I believe, still. So, but these can be good signposting documents also to just get a grip of sort of what is involved in the process and what types of metrics they should be reporting out on. So that's one sort of, I guess, area which smaller companies can work on as a starting point.
Thanks, Jennifer. Victoria, how is it being projected down onto your smaller companies in your supply chain yet, or do you see that as something that's coming?
So we report finance emissions, which brings in a large number of companies' emissions. We use data providers to help source some of that information rather than directly from those companies in this case. And I think that we are seeing more emissions data availability. We also provide a data quality score on our reporting, which gives, for finance emissions, which gives an indication of how much is estimated versus how much is actual reported data. I think in terms of smaller companies thinking about where to start with this, I think looking to build on capabilities and existing processes in finance is a good place to start. I'd also think about it may be that areas like people metrics may be a sensible place to start, because that may be data that you already have, and you can build out areas around reporting on diversity, etc. So I think about where's a good place to start for you, and what makes most sense as a starting point to start to build a capability and awareness internally. We found that helpful in our approach.
Thank you. Okay, I think it's time. We're going to have to draw a line under this. Jennifer and Victoria, thank you so much. And thanks in absentia to Tim and Mark. Your contributions, I think, have been really, really valuable. I've learned a lot, and I'm sure that our audience have as well. Let me just take a moment to talk about some other stuff that we've got coming up. Firstly, I just want to be sure everyone's aware that we're doing this all again next week at the same time on the 26th of June, the penultimate webinar in this series. We'll be talking about how to tell a compelling story through your sustainability reporting. Today's been pretty pretty assurance and compliance oriented. Next week, we want to shift it over to making it more engaging. We have an excellent panel lined up to discuss how to engage stakeholders through sustainability reporting, what that really means, and how you can achieve compliance while also ensuring your reporting is authentic to your values. Some other upcoming events, we'd be delighted to see as many of you as possible at our annual summit. That's going to be on the 1st of October at the London Guildhall. It's our biggest event of the year. Tickets are available now. They are limited, both for members and non-members. So please do follow through that link and have a look. Also, for members of the Global Compact Network UK, please note that our AGM is on the 25th of June next week. It's going to be live streamed on Zoom. If you're a member and missed the registration period, it's actually not too late to register on Zoom. I'm sorry. We've got a keynote from Paul Pullman. It's going to be a great session, and we hope very much that you'll be able to join us there. That's all I have. When the session finishes, there will be a pop-up for you to provide us some feedback. We'd appreciate if you would do that to help us continue to improve these sessions. Thanks so much to everyone that put questions into the chat. I'm sorry that we weren't able to get to them all, but we really appreciate your active participation and engagement, and we'll look forward to doing this again really soon. Thanks, and have a great afternoon.